It's Friday, my favorite day of the week, and we are going to do another Bitcoin Macro War Room breakdown. We're going to look at the charts. We're going to look at the data that was released this week. We'll take a look at the Fedwatch because today is Jackson Hole. So Chairman Powell is going to be speaking. He has the fate of our bags in his hands. So it's going to be a volatile day. And then we'll take a look at some on-chain data and my system to see if we should be risk on or off. You know, it's been an interesting week because my timeline on X has been so dystopian and kind of on both sides of the spectrum. You have people either saying this is the cycle top for BTC, that's it, it's over, pack it up. And you have another cohort saying this is just sort of the beginning and we should be super bullish into 2026. Which camp is correct? We'll shed some light on that, but let's get started with the chart first. We'll take a look at it. So the main thing to note from last week is that the air gap is now over 40%. The correlation 30-day is actually negative for Bitcoin, which is, kind of crazy, but it is what it is. The 90-day and 365-day correlation is still solid. Liquidity regime is still risk on. We actually dipped out of this band and kind of came back in this morning. So we'll see how this plays out. But there's definite weakness in the market, right? The price is at 112, 200-ish right now. So this is definitely a sort of lull. We had this fake out and now we're back towards, 110-ish. So we'll see kind of how that plays out. But that's the chart. Nothing really too crazy here. Nothing changed that much from last week besides the air gap sort of increasing. Liquidity has kind of stayed the same in this area towards the end of the year. So we'll jump into the actual data. Now, the data this week was important. Pretty much everything that was important dropped on Thursday. So you had unemployment claims, which was a bullish print for BTC, right? If labor is softening, that is a dovish tilt for the Fed and gives them urgency to cut, right? It drives yields down. It drives the dollar down. So this was a good print for Bitcoin. Philly Fed Manufacturing had a pretty big miss. This is a regional factory survey, basically new orders, employment, shipments, stuff like that. A weak print, though, is also bullish because it raises the odds of them easing. And we'll take a look at the probabilities here in a second. The most important prints were the Flash Manufacturing PMI and the Flash Services PMI, which both beat by a pretty decent margin, especially manufacturing. And this is kind of a double-edged sword because it signals that the economy is still doing good, right? And that the business cycle is starting to expand, which in my whole thesis is definitely bullish for risk assets. It's definitely bullish for Bitcoin. Historically, when the ISM expands towards 55, 60, that is when you see the really big runs. We have, I've said this every week, we've had the longest contraction or time spent under 50 for the ISM, I think, ever recorded. So when this breaks out, it's going to push the markets higher, all risk assets, but specifically Bitcoin. However, the other side of the coin is that the Fed will look at this and be like, well, the economy is doing good. We don't need to cut. And they're going to be wrong. That's my opinion, but they're going to be wrong. 90% or something like that of central banks are currently easing across the globe, except for the United States. So they're behind. Anyway, with that out of the way, I think we can look at the projected rate cuts, which last week we looked at this was almost 90%. And now it has dropped to 70% for a rate cut in the middle of September, with 30% staying the same. Obviously, with Powell speaking at Jackson Hole today, that'll be a very important speech to see kind of how he's looking at things. So we'll see what happens with that for October. This has also dropped 52% and 31%. And if you look at the probabilities, again, these have kind of dropped off a little bit given all of the data that has come out. So it is what it is. Let's take a look at the actual system. So for this, I've added something new. We've bumped up the version, and I've been working on this sort of quote unquote in my lab, which is just my office here. And this is basically a overlay for whether or not Bitcoin is risk on or risk off. So you can see the red shaded areas are where we're sort of risk off, and the green is obviously risk on. This is, take this with a grain of salt. This is more of a mean reversion type of indicator in a bull market, meaning when we're in the red, that's generally a good place to buy. I look at this more as a can I use leverage or not type of indicator. So when we're green, I could maybe add some leverage if I feel like it. When we're red, don't be adding leverage, but that would be a good time to add spot. So anyway, I'll keep working on this and I will keep posting this sort of as we go. Currently, even with the drop, we're still green. As far as the actual system's concerned, we did lose a couple of points because one of the on-chain indicators is sort of neutral. It kind of flashed bearish for a second, but has since rebounded. So I gave that a 0.5, and we're still 93% risk on. All of my institutional research, they're still extremely bullish going into Q1, Q2, 2026. So nothing really changed there as far as any of that data. We only lost a couple of percent here for the macro weather forecast. And we can look at some of the tweets for this week. So we'll start off with, I'm going to show my own sort of stuff here. This is kind of related to the macro overlay. Just show what the market is right now. What do I mean by that is, what is the state of the market? Are we risk on or risk off? So you'll see the blue and the sort of orange lines are risk on, and the red and green are risk off. I should fix the colors here. They don't really make too much sense, but you can see in August, early August, we really dropped down, and that was kind of a risk off area. Same thing happens on this chart, right? In August, we kind of had this whole nuke, and that's pretty much it for this. I'll keep working on this. I'll keep updating it. It's basically a live snapshot of, what the sort of sentiment is and what all the indicators are saying. So with that out of the way, I did want to call out APSK32, not really specifically maybe for this chart, but he does a lot of amazing macro research. So definitely give him a follow on X if you aren't doing so already. This is the BTC gold ratio, and this is the 4-year cycle sort of overlaid. We haven't had a cycle at all if you're looking at it from this ratio. So again, this just confirms still my bullish thesis for 2026. Timothy Peterson, another amazing macro analyst. You can see this cycle has felt different because it has been different. The red line is the current cycle we're in. The other two lines are previous cycles. And you can see the price movement has been subdued. And I think that this trend will continue as there are nation states, sovereign wealth funds, treasury companies. The volatility is going to continue to sort of decline slowly but surely for Bitcoin. And we're going to just have this annoying, slow melt up that is going to chop everyone who's trying to trade it out of the market. And in my opinion, the long-term investors will be rewarded, but it will not be easy. So Breadman is definitely a character. I love his tweets. I'll read the tweet he quoted really quick. Sometimes I pause and reflect on the fact that my entire financial portfolio is currently composed of an imaginary internet Ponzi coin and the stock of a company famous for having the largest peak to drawdown in the history of financial market bubbles, and whose CEO is currently leveraged to the tits on the same internet Ponzi coin, which he refers to as the goddess of truth. And that I consider this a sound financial strategy with a virtually 100% chance of retiring my bloodline. I think we all sort of feel like this sometimes. I don't have any MSTR. I don't touch that. Anyway, I think we're still very early. Like, you go outside, you talk to normal people, they are not investing in Bitcoin. They're not looking at it. They've probably heard about it, think it's some scam, and haven't touched it. So I think in terms of the global population, we're still very, very early. And this definitely does hit hard. So shout out to Breadman and shout out to BitPay as well. Wicked, another great macro sort of chart analyst. We're a third of the way through this epoch. In past epochs, we already had peaked or peaked shortly after this point. Is this time different? I think the short answer to that is definitely yes. This is not going to be like other cycles. Again, I think the reasoning for this is the ISM has been contracted for so long, the longest I think in history, and we haven't had the sort of standard business cycle yet. We've had this just slow grind up from the lows, and it's going to be different. It is different. There's no denying that. So anyway, that's it for the tweets this week. Let's take a look really quick on the on-chain indicators. So again, IFP hasn't changed here. Nothing surprising. This has been bearish since I started this sort of video series. This is the indicator I was talking about that sort of flashed really quickly to bearish, but has since rebounded. You can see it did flash bearish there and it has went back up into bullish. So it's basically neutral in my eyes, which is why I scored it a 0.5. for the MVRV Z-score bull versus bear market. This is still bullish, although it has come off a little bit. So we'll monitor this closely. Sharp ratio, nothing really to note. It's come off a little bit. Adjusted Nupal still yellow. That's fine. MVRV has come off a little bit, which is good to see. For long-term holder and short-term holder net position change, so this is whales versus retail, you're still seeing retail buying. I think when this finally capitulates and you see long-term holders actually begin to accumulate, that's when we'll be sort of signaling a reversal. And that's my thoughts on that. For LT, again, this has cooled off rapidly, which is really good as well. Market cap change and Bitcoin price, this has spiked a little bit. Nothing too much to glean for there. Retail investor volume, so demand, has nuked, which is really good to see. And you want to see this sort of kind of deep in the red, but I don't think it's changed that much. So not much to say there. XO supply ratio momentum did signal again with a bigger spike. So definitely keeping an eye on this. You can see that this has historically sort of signaled on short-term bottoms. So that's a really good sign as well. Realized price, still green, still bullish. Everything's good there. DCA, smart DCA is still signaling a buy, which I think, again, if you're not exposed, these are pretty good entry points to start sort of DCAing. I think that's it. OTC address cohort balance has actually kind of come back up a little bit, but nothing really significant there. So that's pretty much it for the on-chain indicators. And that's another Friday Macro War Room in the books. I really hope you enjoyed this. If you stuck around this long, first of all, thank you for watching. I drop these once a week on Friday morning. If you did like the video, you know what to do. I'm not even going to ask you for it. I will see you next week and have a great weekend.